We've also got Raman Aggarwal, the co-chair at FIDC, joining us this morning on those measures announced by the cabinet. Raman, thanks for joining us. Just take us through your sense of how this will really help to kickstart those activities and get the money flow going again with regard to PSBs now being able to buy NBFC assets to really, also open up that flow when it comes to the NBFCs.
So, see, we at FIDC actually had pointed this issue the day the scheme was announced, that it has a very limited scope in its original avatar, because the criteria of AA rating, because AA rated pool does not need any credit guarantee. And, banks were anyway taking those pools, buying out those pools. So the scope was limited. And we had requested, and we had even met the finance minister, and I'm happy to share that she's accepted our request, and now that they have reduced the credit rating criteria, because it is also challenging in this scenario where there's a lot of negativity around to obtain that kind of credit ratings. So having said that, while the availability of the pool will definitely increase, it still remains to be seen how much the banks show interest. Because, let's understand one scenario. All those measures which have been announced till date, whether it's by Ministry of Finance or RBI, they have all been routing funds through the banking sector. Now, post the ILFS default, the banks have become risk averse. So the trickle-down effect has not really happened, and that is where the pain in the sector continues. So, that's where we've been saying that there is also a greater need to diversify the funding sources and look at funding sources outside the banking system also. While we heartily welcome this move, this will certainly provide increase the availability. But what remains to see is how much interest the banks will show now.
Raman, the cabinet also okayed the amendments to IBC, and just from a market perspective, wanted to understand, because what it does now is it ring fences winning bids. So would you say that maybe, cases like JSW, which will now not be liable for Bhushan Steel, these kind of deals would actually be able to go through smoothly?
No, I think it's a very logical step to take, because any fresh bidder who's already, investing money and buying out a sick asset, to have him ring-fenced from all the legalities was, I think, perhaps a loophole left in the system which the government is rightly planning to plug. So I think that is very, very important, and I think this should give a boost to the entire process. And as you said, we may see some more resolutions and some more, payments coming in.
Okay. All right.
Yeah.
Okay, so that's the call coming in there. Now, PSU banks should, of course, be the largest beneficiaries of those new changes. Raman, in your view, who's most likely to be, positively impacted by this?
Well, that'll be difficult to say. I would say, I would generalize and say, not to go to the details, that it will have a positive impact on all the bidders and perhaps create a more positivity. We may see more bidders coming in front, to bid for the assets put up for sale under the IBC process, and should speed up the entire process, because unfortunately, in spite of the 270 days limit increase to 330, even that is not happening. So I think this was perhaps one of the cases, because it did create apprehension in the mind of the bidders. Nobody wants to go into legal, issues in spite of bidding. So it's a positive step. I would refrain from saying who all would specifically benefit from this.
So, in fact, speak with one party who would be positively impacted. We were just talking about how this benefits PSU banks. Raman, we'll let you go on that note. Thanks so much for taking the time out.